Hello.
Hello. Welcome to the Daily Market Web with Sennett and Victor Niederhoffer. The market is unfathomable and mysterious, all-encompassing, very duplicit, and evil, especially in its infrastructure. Today was a perfect example of the evilness and the unfathomableness of the market. Now we'll try to make some sense out of it. Elena, what's your thinking?
Well, the theory goes that the market opened up with a large gap up because of the positive news over the weekend. We had the first vaccine dose administered, and Pfizer is shipping its first vaccines all over. And Brexit seems to be delayed yet again, so all the good news made the market opened up, but then we have sold off 50 points because the news have changed. The news started going bad after the open. New York City has another full shutdown potentially coming very soon. London has already shut down, and on top of this, the news about coronavirus is very scary all over today. CNN has this scary headline that more than one American is dying every minute. And there is some new scary variant of the virus. So I think that's what contributed to that sell-off.
Well,
what is your theory?
My theory is that the market does what it's going to do regardless of the news. And it started out it played Dipsy Doodle with the round number of 3,700 on the December S&P. Played footsie with it, it got up to 36.98. And then we have the chart. By the way, I'd like to thank my technician, jack of all trades, Mr. David Medley, very helpful. In case we have anything to test, we'll be testing it. The market's now gone down 4 days in a row.
Yes.
And by the way, how does that look? Is that very bullish?
Well, probably depends on how I put it in magnitudes, but I'll
Put it in
low magnitudes and see what happens.
But the market is still 1% below its high in the S&P. And the DAX and the Nikkei are way up. They are up about 1% today. The NASDAQ was up 0.75%. What do you attribute the divergence between the NASDAQ, which is up 38%, and the S&P, which is up 12% this year? Why do you think it's happening?
Right, I think it's, as we discussed in the previous episode, has to do with the fact that technology has been a huge beneficiary of this shutdown at the expense of the small businesses. Various businesses are technologically oriented, so people can work remotely and buy remotely, so you don't have to shut down, as opposed to other industries. This divide has been going on favoring technology even before the coronavirus. And the coronavirus only exacerbates that divide. It amplified it.
I noticed that the market's been down 4 days in a row, 7 times this year. And it looks like it's slightly bullish. On average, the market goes up 0.5% on the days after 4 down days in a row. Now we have the Fed open market meeting coming up. That's always an occasion for bullishness.
Victor, do you ever look at the volatility VIX index? Because today it closed at the top of the day, close to the highs of the day. Is that something that you look at all?
Well, I could tell you a lot of stories about the VIX. I find that in general it's correlated about 90% with the inversely with the S&P during the day, and it's there to create VIG, to make the public lose much more than they should. And sometimes the VIG gets up to the 25–30% level, and the big options brokers can liquidate all their customers, take the opposite side of the position. I don't think it adds much. In fact, when the VIG is high, gets up to 30%, which is about twice as much as the average daily percentage change in the stock market. It's generally very bullish because it, but there's a third factor involved. It's not like the VIX causes the S&P to go up. The S&P goes down and it forces the VIX up, and the S&P then it becomes very bullish. So you have to do what they call a path analysis to go into it, to find the causal nature. I find much more relevant is the fact that the European and the Asian markets were up much more than the S&P. What do you think for tomorrow? You going to be short as usual?
No, actually, I'm not. I'm flat yet again. But
You said
no, I may sell futures if the future is going to be up overnight or in the evening. I may sell that, but I'm not short right now. But
you said that you had an errand to do Friday evening, and that you weren't able to get long the market when it opened up near the highs, up 1.5%. You must have felt like you had missed a great opportunity.
I did, and so I shorted it to get payback, revenge. well, at the old, actually 10:30 is when, 10:20 when I shorted it, because 10:30 is usually I found it's usually the time when the market has the potential to reverse. It has like the time structure to it. So 10:30 is a good time. If you think the market can sell off, that's usually the time when it does.
Yelena, have you tested that?
I have not.
Well, right now we'll test it.
Oh, well, I'm not saying that every 10:30 is a sell-off, but I'm saying on the
Well,
sell-off days.
Is
So
it a
how would you
recur-
test?
is it a recurring tendency, or is it just?
It is it's a recur. If the sell-off happens, it often happens at 10:30 for whatever reason.
And-
That's what I'm saying. Not every 10:30 there is a sell-off. So it's kind of hard to test. Do you see what I'm saying?
Well, let's see what the tests can ascertain for us.
Yes, maybe at some point we could discuss the testing that you're doing and which software you're using and how you're doing it at some point in the future, if you don't mind divulging those secrets.
Well, I'll divulge the secret. About 1977, I took a trip to the Tandy Corporation, and we were talking about an acquisition. And at that time, they had initiated the Radio Shack TRS-80 computer. And when I saw the catalog, I thought this would be a great thing to do. And I bought the first TRS-80 computer for myself and for my brother Roy. And that computer had 32,000 bytes of memory. And if you used a disk, it took away half of the memory. So I inputted all my data with a cassette. Now, fortunately, at that time, my assistant was very able and was an excellent racquetball counterpart to me. And after we played racquetball, we worked on the TRS-80 and we wrote a little program. This is 1976, so it's 45 years ago. And we wrote a program to take account of all the interrelations between all the markets and how they affect each other. But the key was the effects are very different every day of the week. They're different on Mondays and Fridays, and they're different at 9:30 and the close. So it had to be a pretty encompassing program. It took up a lot of memory. In fact, one of the humorous things that my racquetball playing, a very smart assistant, said, when we used to have a problem with putting numbers above 30,000 in there. And it was always a problem in putting the S&P in there. However, when the crash occurred on October 19th, 1987, the stock market got to around 250, and it was below the 30 100 number. And because of that, we were finally able to put in proper prices and to use the disk. So the crash had a silver lining, but in any case, that pattern program has been evolved over 50 years. And I've made various versions of it. My brother Roy made his version of it. And Mr. Tom Downing, who we stole from Value Line, it's a great program. He's made some fine evolutions to it. In any case, that's the program that has the relations with every market at every time for the last 30 years. And that's how we can tell whether 10:30 is a good time for the market to change, which we now tell you. And
10:30 p.m., right?
we look when the market's
Up 10 points or more.
when the market's up 10 points the previous day.
This is from open at 9:30.
I say they're 22:30.
From 9:30 to 22:30.
It's 10:30. 10:30. You got 22:30.
22:30 is 10:30 p.m.
No, it just means 10:30 a.m.
10:30 a.m.
So anyway, it's a pretty beautiful thing to be able to tell what all the interrelations are. And when we started out, hundreds of people would come to our office and say, you know, you're doing exactly the same thing that Renaissance is doing. And in those days, it used to be much easier. You could just buy it down open, sell an up open, and we had, I've had many assistants, many employees to work for me. Unfortunately, now the program is proliferated, and all the people that work for me have taken my program, and often they'll send me a prediction. Okay, and now we look to see if the market's, what happens if it's down? If the market's up a lot as of 10:30, let's say 1%, on average, it goes up about 0.1% to the end of the day. And there is a slight tendency for it to turn around, for it to go down about 0.1% to noon. So it basically dipsy doodles when it's up. And when it's down 1% as of 10:30, it doesn't reverse. So your 50%, when it's down as of 10:30, it continues down to the end of the day, goes down another 0.25%. So you're thinking about the reversal at 10:30 is half right. It reverses in a meaningless fashion when it's up, and it continues in a meaningless fashion when it's down. That's the problem with using an anecdotal approach to the market. What do you ascertain in the world of science today?
In the world of science today, there was an interesting article over the weekend about the drug called ivermectin, for example. It's a drug that has been widely used in India and has been prescribed as a prophylactic and a cure for COVID there since August. So perhaps that's why India really doesn't have much of an epidemic of COVID. But it seems like in US, nobody's interested in using drugs that have been in existence. Everybody wants to find a new drug because then you can patent it and make a lot of money on it, as opposed to repurpose use of drugs like ivermectin. For example, one study in Argentina showed that this antiviral was given to 800 nurses and none of them got sick, while 400 nurses who did not receive this drug, 58% got sick. So this is quite remarkable. And there's a whole bunch of other studies like that, yet it seems that nobody cares. Instead, we want to develop new unproven drugs with untested, unknown side effects and charge the taxpayer or the person $5,000 for it, as opposed to cheap and effective drugs that already exist. What do you think about that?
Well, I care very much, but I care in a different way. I care very much that several weeks before the election, Pfizer had an announcement that they were going to make an announcement, a very important announcement concerning the efficacy of a vaccine they were working on. Now, the way those studies work, they gave it to 50,000 people, 25,000 received the placebo, and then they have a group of doctors who vet the results. They
Right.
test all the patients, and then they compute the statistics on it. And in that case, the statistics were pretty clear, but it's obvious that Pfizer had the announcement, had the results before the election. They held it back until the day after the election. In the same vein, there were riots and protests all over the country,
Right.
but somehow they stopped
Conveniently, very conveniently.
1 week before the election.
Right.
The stimulus bill looked like it wasn't going through. No, there was no way the two parties could come together. But as soon as the election occurred, there was talk about the stimulus bill would be likely,
Right.
and now it's 100% that it will occur. It's just a question of timing.
Right.
Again, before the election, there was definite and unequivocal news that Hunter Biden was being,
Investigated. Right.
in fact, there were 4 different investigations of his going on, but not one paper would go with it except for the New York Post. Even the Wall Street Journal hit it on their, didn't go with it on the news page. On the editorial page, it was very, very lightly noted.
Covered.
So you had those four things that were suppressed before the election. And you say what you will about the president, he got a very bad deal. Because if any one of the, to say nothing of Dr. Fauci,
Right. But
he was trying to sink the president. So you had all these five things, forget about the mail-in voting, that if there had been a little bit of fairness, of equity, then we'd have a different result. So
well, but you mentioned mail-in voting, and I wonder if any of those things would really matter, because the vast majority of people actually voted weeks before the election date. So Hunter Biden news, the vaccine news, none of this would have mattered, because this year, vast majority of people voted earlier or by mail. Actually, out of 160,000, 100,000 voted either early or by mail. And so why would that vaccine release before the election matter? It really wouldn't. I think the whole premise right now is that the election date has been moved maybe weeks earlier than it actually is, because most people vote early. So the news needs to be released earlier.
well, that's exactly why you'll find that almost every event that has a definite beginning and end, and seems to have a specific time and date in which it happens, was really known several weeks beforehand, so that the news that we receive is always behind the form. It's always 2 weeks or so behind the form. And there was a movement back in time. It's like a change in the tempo before the election, so that all this news was held back until the mail-in voting occurred.
Right.
And the reason that, because so many people did the mail-in voting, the news was withheld until after they voted. So I don't
Right.
think that there, if the news had occurred, now everybody is talking about Barr's withholding of the news about Hunter Biden. What's your views on that?
Right. Yeah. Like I think we discussed in the previous episode, that it was ridiculous that he knew about this, and he just basically decided to sink the president. I mean, it's not news to anybody that Trump doesn't have any friends, whether it's in his own party or in Washington, D.C. apparatus. Nobody seemed to like him because he wants to change the way things are. And whether it's military industrial complex doesn't like him because he doesn't let him start more wars, or pharmaceuticals who don't like him because he wants to lower the cost of drugs for Americans, or the so-called deep state, which you could just say the people who work in DC. The vast majority of them, 90% of DC votes Democratic. So of course they don't like him. So all of the forces were against him. The big media, the Facebook, Twitter, all of the social media also doesn't like him. So they all suppress the news as well. So it was a tough battle to win. But I would say that he also didn't help himself in many ways. He could have done better than he did.
By the way, one thing that's very important for our listeners is to read a lot, because the market encompasses so many different fields. It's very important to increase a person's knowledge. I have a book that I'm going to recommend. I'm going to read a little from it, called The Time It Never Rained by Elmer Kelton. And it's, in my view, it's the best Western that's ever been written. It's also, in the view of all the Western writers, it's the best Western writer, the best Western. The Elmer Kelton won the Spur Award, which is given by Western writers, 9 times, and he was voted the best Western writer of all time. He also knows a lot about the market. And I find that whenever I read him, I learn a lot about the market. And he relates to many different things that happened in West Texas in the cattle, sheep, and goat industry that also happened in the market. And that happened to me, unfortunately. Now here's where he's having hard times because it didn't rain for 7 years. And he has to sell his sheep. He has to, eventually he sells his cattle. In those days, sheep were much more profitable than cattle. And all the ranchers would say, well, we have the cattle for our pride, but the sheep pay the bills. Unfortunately, the price of sheep went down with the price of cattle. And so he had to sell his sheep. Eventually he ends up buying goats. He once had 10,000 acres. Now he's left with about, which he owns himself, and now he's left with 1,000 acres. And he's forced to ranch goats on it, Angora goats. But when he's about to sell his sheep, so he finds a buyer, Boston buyer. Said, how's wool? And he says he's never been a wool buyer who doesn't say the market's on the verge of going to hell. And that's true. Whenever you want to sell something, and I've tried to have many different items I've tried to sell, always the buyer says, the market's terrible. Then he says, mills haven't made a dime this year, the buyer said. And he says, grease prices are due for a drop. Then, here's the funny thing, he says, future prices are going down to the nadir. And Charlie, the hero, notes that when future prices are up, the buyers always say, oh, that future prices have nothing to do with the actual spot prices. But when they're going down, they're the key. When I sold my silver, And silver had gone up from like $5 to $50 during the time I held it. But my antique silver didn't go up at all. The dealers told me the price of silver has as much to do with antique silver as the price of plywood has to do with a Chippendale furniture. Anyway, there's immense wisdom in this book, so I would recommend it to everyone. What else do you see?
Well, what is your prediction for the rest of the week, according to your models or your experience?
Nothing. I found that my experience doesn't help me at all. That's the funny thing. Everything I do is quantitative. And I find that a few weeks ago, I had a thinking that based upon my past 50 years in the market, gold was in the 1700s. It had gone down from 2,000 in about a month. And Bitcoin was going up every day. It's now, fortunately, 19,000. So I bought gold based on a feeling about my insights into markets. And I found that 4 days in a row, gold went down after I bought it. Then I finally gave up on it, and it went up 7 days in a row to 1870. So when you ask me what's going to happen to the market, if you notice, today was the opposite of Friday. Friday opened way down. It went up straight through the day. Today opened way up, went down, closed at the low. So tomorrow, I think it's good should be again, based upon quantitative studies, should be an upgrade. Unfortunately, it's not likely to open way up in the PM hours because it was up so much on Sunday night. So I'd expect it to bobble around until 2 or 3 a.m. Then it will start its dodges and everything to be duplicit, probably open up unchanged, and then it will go up. It tends to go up before the Federal Reserve meetings, the open market meetings.
Right.
So that's what I think.
Well, in addition, according to your theory that good news for progressives are good for the market, tomorrow should be a good news day for progressives because potentially, well, Supreme Court has just rejected yesterday, I think, Trump's lawsuit, and today the electors are voting, and most of the electors in most of the rather swing states that Trump has challenged, they voted for Biden. So at this point, I really don't see any room for Trump to win at all. So today probably is the last day, and Biden would be the official nominee.
Well,
So
eventually there has to be an agonizing reappraisal. Eventually people have to realize the idiocy of being bullish for Marxism and thinking that, as I say, if they were to raise the capital gains to 100% so that no one could make money, the market would go up. The shibboleth around the market is that if there was a meteor that was going to cause to destroy the planet, but then the open market committee was to do some quantitative easing, the market would go up. So I think that just as in 2016, when Hillary was losing on the Tuesday night, when Trump started gaining, and it became, instead of 5% that he was going to win, it became 40%. The market dropped about 3 or 4%.
right.
But then when he won, all of a sudden it was up 3%. And eventually, I think the same thing is going to happen with Biden. Now, I think one thing I'm perplexed about, it's terrible that right now it's getting more and more likely that the Democrats are going to take the Senate. It's only 68% now that the Republicans will win in Georgia. It used to be 80%.
Right.
Now, I think that when the Republicans win in Georgia, I think the market will, and that will be a very anti-woke thing, a very MAGA thing. I think the market's going to go way up. I think people are going to revise their feelings that socialism is good. So that's what I think.
But are you saying if the Republicans lose Georgia, then
I think it will be bearish. I think people that will be the final cataclysm that changes people's thinking. But of course, when I give you my feelings about politics, they're worthless because it's not tested, and any views like that aren't tested are worthless. As far as, at least I have no insights that go beyond the numbers. Well, do you have anything else to share with us? How's the weather there?
fantastic, 80 degrees. Florida is the state to be right now.
Well,
Everything is open, restaurants are open, unlike New York City where they're about to shut everything down. So no state tax, real estate is cheap, come on down.
Well, the opposite is true here. It's snowing and it's about 30 degrees. We're thinking about 24 inches the next day. But I'll say this: do you feel that the weather has an impact on the markets? I think one of the reasons that the market was way up this morning was because Cuomo said that, was de Blasio, the mayor of New York, said that that we should prepare for a total lockdown. Now that's a very woke. Now, what what do the politicians think? How silly, how unable to make their own decisions, how destructive it is to destroy all the small businesses that have worked so hard and that are the lifeblood of the economy.
Right.
Victor Hansen made a very good point in his interview, and he points out that on the coast, the individuals and the entities that are able to take account of the full world market, people in finance and insurance, lawyers, people who are able to go, the tech, that they do very well when there's a lockdown, but everybody else does very
Right.
poorly, and that's why there's a divergence between the market. Anyway, I think that de Blasio's call for the possibility of a lockdown was very bullish for the market. However, there's one other thing that I've noticed, that a lot of times the politicians play a game. Usually there's a special name for the kind of lobbying that they do. They'll talk about some terrible regulation or some terrible bill that's going to occur. And then all the lobbyists will come in and they'll spend a lot of money to get the bill negated. And I think that's what de Blasio does. He's in such a bad shape that he's playing the game of saying this would be a terrible thing, this is going to happen, but then it won't happen, and that will be the only way he'll be able to gain some approval. So don't expect a total lockdown in New York. It's just a fake, as most of the market is a fake. Everything is duplicit, as we say.
Right.
It's very evil, especially the infrastructure that they take a lot out of the market. And you always have to, whenever news is bad, it's actually good. You have to think about the opposite. Okay, thanks a lot, Yelena.
Thank you.
See you tomorrow.
Have a good evening.
Thank you.